Have you ever stopped to think about how important invoicing is for a business? It's more than just a piece of paper or an electronic document. Invoicing plays a crucial role in keeping things running smoothly. So, what exactly are the benefits of invoicing? How does it contribute to the seamless operation of businesses? Well, buckle up because we're about to explore the world of invoicing and uncover its key advantages. Unlock the secret to financial success with Kountin Koins, where numbers come alive and your accounting game thrives. Invoicing is like a well-organized filing cabinet for a business's financial transactions. Similar to how a filing cabinet organizes and stores important documents, Invoices provide structure and clarity to the financial records of a business. Just as a filing cabinet categorizes and stores documents for easy retrieval, Invoices categorize and store crucial information about goods or services provided, costs incurred, and payment terms. They ensure that all relevant details are neatly organized and readily accessible when needed. Moreover, just as well-organized filing cabinet enables efficient document management, Invoices enable efficient financial management. They help businesses keep track of their income and expenses, allowing for better budgeting, expense analysis, and decision-making. Furthermore, just as a filing cabinet provides a clear paper trail, Invoices create a clear transaction trail for businesses. They serve as a reliable record of past transactions, providing a comprehensive overview of financial activities. This trail is essential for audits, tax compliance, and legal requirements. In a typical business transaction, there are two parties involved, a buyer and a seller. The seller provides goods or services to the buyer and, in return, expects to be paid. That's the whole point of the transaction, right? The buyer owes money to the seller, but how much exactly? What are they paying for specifically, and when is the payment due? To answer all these questions, the seller sends an invoice to the buyer, which includes all the necessary information. The invoice lets the buyer know the amount owed, provides an itemized list of goods or services, and outlines the terms of the transaction. With this information, the buyer can make the payment, and the transaction is completed. Now, you might be wondering, are invoices and bills the same thing? Yes, they are. In fact, they both refer to the document sent to the buyer requesting payment for the provided goods or services. So why are invoices important? Well, firstly, sellers want to get paid promptly. So it's crucial to send out invoices as early as possible to avoid delays in receiving payment. Additionally, governments are interested in invoices because most countries levy sales tax on transactions involving taxable goods and services. Invoices serve as records that specify and identify the sales tax, making them legally required for transactions involving registered businesses. To get the specific details, I recommend checking your local tax authority's website. From an accounting standpoint, invoices are also significant because they trigger the necessary accounting entries in the books of both the buyer and seller. They are also used to track accounts receivable and accounts payable. If you've liked the video so far, please give it a like, subscribe, and let us know in the comments what you would like us to cover next. Now back to the video. Using invoices in accounting offers several key benefits. Firstly, invoices improve financial tracking by providing a detailed record of the goods or services provided along with their associated costs. This information enables businesses to effectively track their financial transactions, identify areas where costs can be reduced, and make informed decisions to improve financial management. Secondly, invoices contribute to better budgeting. By accurately tracking the cost of goods and services, businesses gain a clearer understanding of their expenses. This enables them to allocate their resources more effectively, ensuring that budgets are accurate and that the business avoids overspending. Furthermore, invoices play a vital role in efficient inventory management. Businesses can use invoices to monitor and track their inventory levels, ensuring that they have the necessary stock available to meet customer demand. By having a clear view of inventory, businesses can reduce the risk of stock outs, improve customer satisfaction, and streamline their operations. In addition, invoices aid in enhanced compliance with tax regulations and other legal requirements. They serve as important documents to support tax filings and other financial reporting obligations. By maintaining proper invoice records, businesses can ensure they comply with legal obligations, avoid fines and penalties, and protect their interests. Now, let's talk about what invoices actually look like. There are various ways to create invoices, including using the built-in invoice template in Google Sheets for quick invoicing. However, if you want to be more organized, track payments, and generate reports, it's advisable to use cloud accounting software such as QuickBooks Online, Xero, or FreshBooks. Let's imagine a scenario where Artisan Bakery is selling their freshly baked goods to Healthy Eats Cafe. The invoice number assigned is 1038, which serves as a unique identifier for the transaction. The invoice begins with the names and addresses of both Artisan Bakery and Healthy Eats Cafe, ensuring clear communication between the buyer and seller. The invoice date, in this case, is the 17th of July, and it holds significant importance as it sets the starting point for the payment deadline. The sale terms are stated as net 30 days, indicating that the full payment is due within 30 days from the invoice date. This timeline allows Healthy Eats Cafe ample time to settle the invoice while providing Artisan Bakery with a clear expectation for when they can expect payment. Moving on, the invoice description highlights the delicious assortment of baked goods supplied by Artisan Bakery to Healthy Eats Cafe. The description aims to be concise yet detailed, ensuring that there is no confusion regarding the items being invoiced. On the right side of the description, you'll find the quantity, rate, and amount columns. Let's say that Artisan Bakery provided 50 loaves of bread at a rate of $7 per loaf. As a result, the amount and subtotal for this particular line item would be $350. Considering the taxable nature of the transaction, a sales tax of 8% is added to the invoice. This ensures compliance with tax regulations and reflects the appropriate amount owed to the government. The calculated sales tax amount comes out to $28, bringing the total invoice amount, inclusive of tax, to $378. By examining this example, we can gain a better understanding of how invoices are structured, the key elements they contain, and how they provide a clear breakdown of costs. Now that we've explored this scenario, let's delve deeper into the world of invoicing and uncover its significance. Before we wrap up, I'd like to address 4 common questions about invoices. 1. When should I invoice? Invoices are typically sent after goods or services have been provided, but there can be variations depending on the agreement between the parties involved. 2. Are invoices and sales receipts the same thing? No, they're not. While both serve as evidence of a transaction, an invoice is issued before payment, requesting it, while a receipt is issued afterward. 3. What's the difference between a sales invoice and a supplier or purchase invoice? They're actually the same thing, just named differently depending on whether you're the seller, sales invoice, or the buyer, supplier or purchase invoice. 4. Are invoices legally binding? Generally, invoices by themselves are not legally binding. Both the buyer and seller must agree on the terms for them to become legally binding. It's important to have evidence of the agreement, preferably in writing or a signed contract. In conclusion, invoices serve as the backbone of financial transactions, providing businesses with a structured and organized approach to documentation, payment tracking, and compliance. From improved financial tracking and better budgeting to efficient inventory management and enhanced compliance, invoices play a vital role in the smooth operation and financial success of businesses. By embracing the power of invoicing, businesses can streamline their financial processes, maintain accurate records, and navigate the complexities of their finances with confidence. So whether you're a small startup or a large corporation, harnessing the benefits of invoicing is essential for driving growth, ensuring timely payments, and maintaining a strong financial foundation. What are your thoughts on the importance of invoicing in business? Have you experienced the benefits of invoicing firsthand? Maybe you have some tips or insights to share regarding effective invoicing practices. Don't forget to comment below with your thoughts, questions, and accounting victories. And make sure to hit the subscribe button and turn on notifications. So I'll see you in the next episode of Counting Coins. Happy accounting!